Well, not to be outdone by a crazy month in March where we saw interest rates absolutely skyrocket. Here we are now sitting mid April. And basically, we've had three things that have really steered interest rates. Obviously, the geopolitical front with the Iran conflict, we still have sticky inflation. It just will not go away. And we've been experiencing that for years now. If you've been tuning into this channel, you know that well. And the last thing is we do have a labor market that just seems to be holding on. So what we're going to do here today is on the mortgage mouth mid-month market minutes is cover those top three things that so far have moved interest rates. And then we're going to discuss what we think is going to happen for the rest of the month and the top three things you need to be aware of so you can make sure that you're up to speed on what's going to move the market. So, thank you everyone for tuning in. My name is Kevin Weedmark, aka the Mortgage Mouth. Make sure you hit that subscription button so you never miss a beat. So, the top thing this month, no doubt about it, is the continuation of the conflict with Iran. And as you can see, it doesn't really matter who kind of leaks from either side, whether it be this current administration or the Iranian government. Each and every day, depending on where oil's going to go, whether the strait's open, no, it's closed. We're now blockading it. We were bombing away. They were fine. We killed a lot of their leaders. It looked like it was over. And a lot of it out of the White House is, hey, we're getting close. We're getting close. And we can see that interest rates, they're volatile, but what they're doing is they're moving in a range bound. We really have not gone above 4.4% on that 10-year treasury, and we haven't really gone below 4.25%. We seem to be in this tight range, and that is regardless of what oil is doing, because traders believe that a ceasefire is going to come and there's going to be an agreement that's going to be put in place. So, hey, fingers crossed that that happens, because that is a big market mover and something we're going to want to pay attention to as we move forward. The second thing that's really affected us the beginning of this month has been the sticky inflation numbers that have come out. We've gotten a lot of reads on inflation. It continues to be sticky. It continues to also be conflicting. So if you're traders and you're sitting there, given the conflict, the increase in the oil prices, inflation is a major concern. And if you already have sticky inflation, future inflation could only accelerate. And what it does is it pigeonholes the Fed into a position where they cannot really reduce the Fed funds rate. The only way they would be able to do that is if the labor market collapse. And number three, we have not seen that this month. The labor market continues to be fairly resilient. We saw a minus 92,000 number, but the most recent read at the beginning of this month was a positive number. It actually came in above forecast. So again, just conflicting information. There's no consistency in it. So the Fed can only sit there, basically digest the information they're getting. And what they're going to be looking for is a multi-month. I'm saying like a quarter, maybe even 4, 5, 6 months of consistent data before they're really going to make a move on that Fed funds rate front. So that's what we've had so far at the beginning of this month. The great news is that bank spreads have been amazing. They've been at their lowest level that we've seen in multiple years, and they are what are keeping interest rates low. As a matter of fact, we are currently sitting below 6%, depending on your credit and your entire portfolio. So make sure you're paying attention, because interest rates right now are doing a lot better than I think everyone knows. So the top three things moving forward. Number one, we have a Fed meeting the 28th and the 29th of this month. And although we do not expect them to move the Fed funds rate, the vernacular coming out of the Fed is always something that dictates how interest rates move. And I think this one in particular could really bear a lot of movement simply because it could be the very last meeting for Fed Chairman Powell. He is set to exit come May. Who knows what's going to happen? Trump said he's going to fire him if he doesn't leave. There's been a lot going on there, but look, the Fed's supposed to remain non-political, but in my opinion, every level of government is political. And it would be interesting to see what he has to say, because they'll give some indication of what can we expect from the Fed moving forward. Number two, it's obviously going to be that geopolitical front. Are we going to get this ceasefire? If come the 22nd, we don't, and this now goes back into an escalation, that's going to push interest rates up significantly from where they are today. You'd then be looking probably more than likely in the mid sixes. And the last thing to note is on the real estate front, it looks like total inventory is sitting at 1.36 million units. And what that's going to do, it's going to create affordability. The more inventory you have, it's going to allow buyers the ability to negotiate. It's going to keep prices from elevating quickly. It's going to create more affordability. So that is a bright spot. And should we get this ceasefire, and with the lender spreads being as narrow as they possibly can, look, if we get that 10-year treasury down to about 4.1%, 4.05%, you're going to see interest rates like they were when we were all shouting from the rooftops that we were below 6%. You're going to start seeing rates in the mid fives. And I think possibly by the end of this month, we might see those. So make sure you're getting your information into your lender. Make sure that you're getting pre qualified. You're working on your credit score so that you are in the best position possible to make that offer. All right, y'all. I really appreciate you tuning in. Thank you very much. Make sure you hit that subscription button once again, because I drop content on the daily. So you're always in the know. And if I can help you with anything, I lend in all 50 states. Love an opportunity to earn your business. All right, y'all. You need me. You know how to reach me. Cheers.